Okay, are you in the market to buy a house this week? The average fixed rate for a 30-year mortgage came in at 3.75%. Now, that is a slight gain from last week, but more than a full percentage point below the 4.68% from just a year ago. Right? Seems like a buyer's market, but the answer might not be so clear. So let's get to the star of the hit Bravo TV show, Million Dollar Listing Los Angeles. He's the real estate agent with $2 billion in sales under his belt. Josh Flagg joins us now in a Fox Business exclusive. Oh, you look so L.A., Josh. Thanks for joining us.
Thank you.
Let's get to this question of whether it seems like an obvious buyer's market because the 30-year fixed rate is so unbelievably low. And, you know, the Federal Reserve may meet next week and decide to cut rates again.
Well, here's the thing. And I wrote an article on this, which actually a lot of realtors thought was really fascinating because they didn't think about this before. But let's hypothetically say you buy a house right now and you're at a low interest rate. Makes sense. Buyer's market, let's do it. Well, if the prices are dropping over the next few years, but potentially the interest rates are going to go up, wouldn't you rather buy a house for a much lower price in 2 years from now or even a year from now and pay a little bit higher of an interest rate? Or would you rather pay top dollar still at a lower interest rate?
Well, I don't know. I mean, that's way too complicated for me. But I look at rates and say, oh, you should buy now. Ideally, you would get a fairly priced house at such a low interest rate. But the problem is these inventories. I mean, we saw new home sales today. Month over month, they were down about 0.7%. Obviously, that is because there is a real lack of inventory. What are you seeing on, let's say, middle of the road homes, not the fancy pants stuff for the stars?
Okay, not the fancy pants stuff for the stars. You know, I can't tell you about inventory, you know, in the middle of the country right now, what's going on there. I can tell you about inventory, regardless of price, inventory in Los Angeles. There is little inventory, but there's a lot of inventory in certain sectors. For instance, the modern white box, which all these developers have been building for, you know, 3 or 4 years. Sure. It's flooded right now, and that market is flooded with these modern white boxes. And when you have so many of them and they all look the same, you've got a problem because now they're sitting there, and because of that, the prices are dropping. So you have these mega houses. Let's just talk about the mega houses for a second. Let's say 40 million, 30 million, whatever. And if they're selling at 20 million, then the $20 million houses are now selling at 10. And the 10, it's cyclical, then goes sell for 5, and so on down to even the $1 million houses. It's cyclical. Everything affects everything. But going back to what you were saying about the interest rate thing, think about it for a second. It's really actually quite simple. Would you rather pay $2 million for a house at a lower interest rate, or would you rather pay at a slightly higher interest rate, $1.5 million? So that's why I think that people just aren't really buying right now. They're waiting to see what happens. And my clients always say to me, I don't understand. Why don't they just buy these houses at low interest rates?
Yeah.
It's affordable because they know it's going to keep going down.
Your sellers are asking that, I would imagine. And how closely do you watch Jay Powell and company at the Federal Reserve? We've got the Fed announcement next week on in a couple of weeks, October 30th.
You know, I'm not focused on that. It's interest rates are good. I'm not really. My clientele is really more interested in getting the deal. They're not really as interested if it's 3.75 or 3.8. Most people shouldn't be that concerned with it. Yes, of course, every point or every fraction of a point counts. But what you should be considering right now is how to get the best deal on a house and timing, because that's always going to be much more important. You can always refinance. When prices go up, they go down, whatever. Over time, it'll hit this again. I don't know when, but, you know, focus on the deal, not the interest rate.
You just stated it perfectly. Rates will probably go lower, so you wait and get a better deal on a house and make people drop their price. What are you seeing with your celebrity clients? Are they very savvy when it comes to waiting, or are they eager to just quickly?
No.
Well, some of them are selling too, right?
Well, here's the thing about celebrity clients. You never deal with the client. You deal with the business manager or the attorney, which is good and bad, because business managers usually kill the deal because they want to show off to their clients that they're trying to protect them. Nevertheless, if you can make the deal, the business manager is really advising them, let's buy right now, let's sell right now, interest rates, whatnot. But at the end of the day, the client's he's going to advise that to the client, but the client's going to say, I really, really want this house. I love this house. please, and they're going to say, okay, well, I'm just letting you know this is the potential of what you should maybe wait, maybe you shouldn't wait. So the celebrity clients are always a different animal. I mean, that's you should really focus on like my clients that are just wealthy people that want to buy houses. They're just kind of chilling for the moment, not doing anything because they're watching the market.
Great, chill. That's right. Just chill. Don't be too eager. Josh, it's great to see you. Great to see you. Thank you. Come back again.
As always. Bye-bye.